What's up, guys? If you are new here, my name is John, and this is Talk Finance. And today I am giving you another update on Realty Income. Yes, I know they just released their Q4 earnings, and I gave you that update 3 days ago. But what you might not have heard of yet was their $1 billion investment. So if you like hearing about passive income and you love hearing about Realty Income, then consider giving the channel a like and a follow by hitting the subscribe button. It would mean a lot to me, and you will be helping out the channel. Let's get right to the information. Realty Income is investing up to $1 billion of development opportunities with the first major deal of its kind between a real estate firm and a vertical farming company in the United States. Realty Income, which is already the largest real estate investment trust focused solely on owning single-tenant lease properties, is jumping on this emerging industry. The company has agreed to join a strategic real estate alliance to support the expansion of South San Francisco, California-based indoor agriculture firm Planty Unlimited's operation. Under the terms of the deal, Realty Income will acquire and provide funding for properties that will house Planty's indoor farms. These properties will be leased to Planty under long-term net leases, where the tenant pays expenses related to property management, including taxes, insurance, and maintenance. Realty Income's Q4 earnings came back strong and healthy, making sure investors knew that even in a tough market like 2021 and 2022, they have managed to continue their growth, and although Realty Income sees more growth ahead, they said they are being more cautious on who they pick as tenants in this market, as they want to make sure their growth continues on a healthy plan. That sounds great, especially when you see them investing in a growing market such as vertical farming. They would be early to the game in a new industry, but my concern would also be, are they trying to find a deal more than a good tenant? This is an industry that has not really been proven yet, and it will be a risk for Realty Income, especially investing such a large amount in a newer industry. What can make you feel safe is that Realty Income grew to be the largest real estate investment trust when it comes to single-tenant lease properties by doing their due diligence and taking risks they felt would most likely be worth the payoff, or industries they feel will be able to weather a storm. Also, you can feel pretty safe in the industry they are investing in. Farming is a very important industry in the United States, and vertical farming makes it more cost, energy, and time effective. Plenty farms don't require soil or sun to be planted. What they produce can be grown and harvested year-round. They would produce 350 times the yield per field acre when compared to conventional farms. And because of their vertical plant towers, they offer an incredible effective use of space, even planting the same amount of food as a conventional farm just using 1% of the area. Let me show you the video they have on their website.
Farmers have always kept us fed, and the world is changing. At Plenty, we flipped the field and brought it indoors to grow year-round, condensing hundreds of acres of farmland designed to save 1 million gallons of water per week, growing crops like our grandmother's garden, full of flavor and pesticide-free. You'll not only taste the difference, you'll make one too.
The great thing Realty Income is doing here is that it's providing up to $1 billion in funding to Planty Unlimited, but it's not investing that whole amount up front. They're going to be providing the development funding. As Planty grows, they can provide more funding and continue building more vertical farm buildings over time. It's basically a way for Planty to build out its business without having to take on debt. Instead, the cost to build vertical farms will be borne by Realty Income and ultimately paid for via lease payments spread over a long-term lease. Those payments are likely to be higher than they would be if Realty Income had just acquired fully built vertical farms. To kick off the partnership, Realty Income will purchase the land and fund the first vertical farm on Planty's campus near Richmond, Virginia, in a project valued at $42 million. Plenty will lease back that portion of a larger campus. Plenty plans to deploy several large-scale vertical farms on more of the 120-acre parcel it acquired last fall in the coming years, with potential annual production capacity exceeding 20 million pounds across multiple crops including strawberries, leafy greens, and tomatoes. Vertical farming is expected to grow into a $50 billion industry over the next few years. Last year, Walmart struck a deal to invest in Planty as a part of the startup's $400 million Series E funding. Under terms of that equity investment, Planty will supply fresh greens to Walmart stores. A concern of mine when talking about Realty Income's growth is that the company has grown so large it could eventually run out of areas to expand it, which would eventually halt its long-term growth and dividends. But this monthly dividend paying company has a lot of positives. It's the first REIT to expand into a growing industry such as this in the US. It has also aggressively continued its expansion and growth. It takes pride in its monthly dividends so far as to call itself the monthly dividend paying company. And even if its growth in the future were to slow down and slow its ever growing dividend, we would continue to see that dividend paid out from their giant portfolio of building. And if they are able to capitalize on vertical farming leasebacks, they could potentially be set to grow into the future just from this single tenant or industry. What are your thoughts on Realty Income investing into vertical farming? Personally, I like the idea. If you enjoyed the video, give us a like and remember to subscribe for more. See you in the next one.